what we hope to do is to dive deeper into the whole subject of investing in these assets and discuss the opportunities and challenges. We are delighted to have a plethora of very experienced capital market operators who are willing and able to take us through this very important topic. So I'd like to say a big welcome to everyone joining us this morning. And as I usually like to do at these virtual events, it's always valuable to get a sense of where you are joining us from. So if you'd be so kind enough to just type in very briefly in the chat field where you are joining us from. I imagine it could be good morning, good evening, depending on where you are across the world. Already we see well over 100 people joining us at this time, and I do believe those numbers will grow as we proceed with the event today. All right, so we'd like to make this a very efficient event, but just to give you a sense of what's coming up, very shortly I'll be inviting the CEO of the NGX, Mr. Temipokola, to help us set the tone for the event by sharing a few opening remarks. Later on, we'll be hearing also from the Executive Commissioner Operations at the Securities and Exchange Commission Nigeria, who will also be sharing his perspective on this topic. And then we'll move on to a few presentations from our capital market operators who are joining us today. We'll also have a very interactive panel session that will dive into the subject matter ETFs in the Nigerian capital market and its regulatory landscape. We look forward to that engagement. And it is an interactive session. We'll be opening this up to all participants to chime in, to share their thoughts, and of course, to ask your questions. So once again, you're all welcome. And without further ado, I would like to now invite to deliver his opening remarks, the CEO of the NGX, Mr. Temipokola. It's over to you, Temi.
Thank you very much, Wale. Good morning. And let me please stand on the protocols you have already established. I want to start by thanking very much all our panelists who have joined us today and our regulator as well, in person of Mr. Dayo Bison, who has joined us, and indeed everybody who is on this call this morning. On behalf of the board and management of the Nigerian Exchange Limited, I welcome you all to the NGX ETF Conference 2023. ETFs, exchange traded funds, as we all know, are types of investment funds that track the performance of an index or a basket of securities, such as shares, bonds, or commodities, and such other products. They provide investors with the opportunity to diversify their investments at relatively lower costs and allow them gain exposure to different asset classes. ETFs are one of the fastest growing capital market investment vehicles. They offer transparency, liquidity, diversification, better tax efficiency in taxable accounts, and lower costs. ETFs are also used by some governments around the world, including the United States Federal Reserve and the Bank of Japan, and they use them as tools for supporting markets during crisis. Historically, ETF volumes have tended to rise in periods of market stress as investors increasingly use ETFs to allocate capital and to manage risk. The history of ETFs globally dates back to when the world's first ETF was introduced in Canada in 1990. The first US listed fund, the S&P Depository Receipts, popularly known as SPDRs, was launched in January 1993. In only 33 years, ETFs have grown into a multi-trillion-dollar industry. According to the globally renowned data portal Statista, the number of ETFs worldwide grew markedly between the years 2003 and 2022, from 276 ETFs to 8,754 ETFs by the end of 2022. Globally, assets under management of ETFs increased in the same stead by 318%, a yearly CAGR of 17%, from $2.2 trillion to $9.5 trillion as of December 2022. This buttresses the fact that demand for ETFs by institutional and retail investors continues to be on a sustained increase. The Nigerian capital market has not been left behind in the creation and the use of this product. Since the first listing of a single commodity-backed ETF in 2011, several other equity-based and fixed income ETFs have been introduced on the Nigerian bourse. There are currently 12 listed ETFs on the NGX, 10 of these are ETFs that are equity-based, one is fixed income-based, and one is a commodity-based ETF. NGX remains at the core of the development of the ETF asset class in Nigeria. The exchange is the leading ETF market in West Africa and is one of the largest in Africa in terms of listed products, turnover, and market capitalization. It is noteworthy to mention that despite the enviable status of the NGX ETF market in West Africa, the market remains at a very nascent phase and is largely dwarfed when compared to the South African ETF market, which has 95 listed ETF products and a market capitalization of $7 billion. There has been a dearth of new ETF listings on the NGX in recent years. However, there are bright spots on the horizon with 4 new ETF listings in the pipeline. It is important to state, of course, that the current macroeconomic challenges resulting in the exit of foreign investors impacted on the ETF space, which resulted in a dip in the ETF market cap from the highs of 24 billion naira that we had it before. Finally, I am confident that with a diverse array of panelists in this conference, proven workable suggestions that would boost the ETF segment of the market will be discussed. I remain enthusiastic that all the market participants in this conference will apply the learnings from this conference as we work very hard to continue to deepen this asset class in our capital markets. The exchange remains keen to provide an efficient, liquid, and transparent market for investors and businesses in Africa to access capital and to build wealth. We're truly pleased to host this event in collaboration with the SEC, Stanbic IBTC Asset Management, Dativa Fund Managers Limited, and FBN Quest Asset Management. Furthermore, we have the Johannesburg Stock Exchange, FMAN, CSCS, and the Shareholders Association, who are strategic partners for this epoch-making conference. We will continue our collaboration with all market stakeholders for the collective growth and development of the capital market in Nigeria and in Africa at large. I welcome you once again, and I encourage you to participate actively in all of the discussions today. Thank you.
Thank you very much, Temi, for those opening remarks. I think nicely setting the tone for what should be a very informative session. And many thanks to all our partners, as he mentioned, for joining us to make this all happen. We deeply appreciate your participation in today's program. As we move on now, I'd like to welcome to deliver also his opening remarks, the Executive Commissioner of Operations at the Securities and Exchange Commission, Nigeria. I now yield this stage to Mr. Dayo Obison. It's over to you.
Okay, good morning, and thank you very much, Wally. Thank you very much, NGX, and thank you very much, Timmy, for the kind introduction. And it's always a delight. It's a really welcome idea, and only, not just welcome, it's almost an obligation that we have to work with not only the NGX, every stakeholder in the capital market to make sure that the capital market not only thrives, but it thrives in a sustainable fashion. I hope I'm audible well enough. Now,
yes, loud and clear. Yes. We can hear you.
Okay, great. I had something prepared to read, but there's no point. It would be almost, I don't know who's plagiarizing who, because almost everything I have contained in my own remarks is what Temi has said. So there will be no need to just keep rehashing or mentioning the things of the tracing history and what we have done. But I think my own quick remarks will just be where we are and where we should be and what should we be doing. I remember, if not the first, one of the very early stages of the ETF conference. I participated in that. I was a speaker along with others on the stage. That was a couple of years ago, I believe 2018 or 2017, I can't remember. And not one of all of us that were on that stage, myself, Audu Shuaib, Damilola, not one of us worked in a firm that didn't have or what did create an ETF. So it's been a long time coming, but the truth of the matter is, where are we? How popular is it? Is it growing? Is it contributing its own efforts to the depth of the market, which we all know, and it's almost like a sing-song in every presentation at the start of every year. A lot has been said, a lot has been done, a lot will be done, and it's music to my ears and quite endearing to, quite pleasant to note that there are 4 more waiting to be listed on the NGX platform. But the question is it reaching its full potential in terms of appreciation, tradability, acceptability, inclusion in portfolios across the market? I believe this is what this conference seeks to address, and I hope it will address. Given the parade of knowledge experts, I have no doubt that justice will be done. However, I am quite concerned about the audience. Maybe what I'll do in addition to the very knowledgeable exchanges that will be going on after my own speech is to please task NGX and even task myself and the commission implicatively to make sure this message of ETF and ETF growth, the inherent benefits of how it is a ready tool for diversification when so many other risk criteria could limit a fund manager or an investor, is a very, very good, formidable instrument that can help anyone turn that curve or go around that bend. On that note, without getting in the way of speakers that will be exchanging knowledge, I wish you a very, very good conference. My colleague, Ms. Maidawa, is at hand to give her own contribution from the SCC. And I look forward to further collaboration in days ahead. Remember, I didn't say in times or years ahead, in days ahead, for us to be able to make ETF, not only the ETF, other instruments that hold inherent benefits for investors, institutional, individual, in associations, make it more popular and let them see the benefit. I look now that the last time I checked, we were 159 people on this platform. Now we've gone up to 308. I don't know how many of those are PFAs. I don't know how many of those are institutional asset managers that will benefit immensely from the exchange of information that will be going on over the next couple of hours. On that note, NGX, we thank you again. It's always a welcome idea and a welcome opportunity to partner with you. And I see other people, bigwigs in the industry, from Noma Awo, Rabi, you are with me here, and a couple of other people that are joining. So I wish you good deliberations, and may we keep growing as capital market. Thank you very much, Wally. Thank you very much, NGX.
Thank you very much, Mr. Dayo Bison, Executive Commissioner at the Securities and Exchange Commission, giving us his perspective. And if I can speak for all those participating, challenge taken. I think that is the whole point of this conference, that we can work towards the deepening of the ETF products or assets in the Nigerian capital market. And I think right now we're going to move on to what I describe as the conference proper, if you like. So the learning continues, or should I say begins in earnest, as I invite to make a presentation on ETFs as a portfolio and risk management tool in capital markets. I would like to now welcome Adele Hatting, Exchange Traded Product Manager, all the way from Johannesburg, South Africa. She is with the JSE. It's over to you, Adele.
Thank you so much, and good morning to everyone. I will now just quickly share my screen. If you can tell me that you can see my presentation.
It's coming up. Yes, we can see it.
Oh,
please
good. Okay, great. I think I might just switch off my camera so that we don't get distracted. Okay, right. So I thought as a start, and I am mindful of the time, so I please ask that the organizers keep me honest with my time. This is just to give you a picture of what is happening globally. As you know, and I think you're fully aware, the global market for ETFs and ETPs is significant, exceeding now $10,000 in assets under management, with a compounding annual growth rate of close to 17%. So significant, and there's a very evident J-curve formation taking place there. So who knows where the growth is going to end, but exciting nonetheless. To give an indication of the JSE's growth, now we are much smaller in comparison, and To date, so this is December's figures, but most recent figures show that we have a market cap of about 128 billion rand. That is roughly $7 billion US, and we have 95 ETFs listed on the exchange. We anticipate 2 new listings happening next week, predominantly equity market focused, however. And I'll touch a little bit later on what we anticipate the future might hold, specifically for the South African ETF market. Right, just to give a quick picture of what our lay of the land looks like in South Africa. So we have currently 7 ETF issuers. We anticipate we probably might be losing 1 ETF issuer this year as they are being acquired by a new issuer. But to date, there are 7. The biggest in terms of market share is Satrix. I'm not sure how well you're familiar with the brand. Satrix was our first ETF issuer in the market, listing its first ETF in November 2000. They currently hold a market share of 32%. They recently acquired a plethora of Absa Capital. Just give me a sec. Shall I start my video? You can see me now. Recently acquired a plethora of Absa Capital's ETFs, I think 15 in total. So it really pushes Satrix way ahead of the other market players at the moment. The closest competitor to Satrix would be Signia in terms of market share. Out of the 95 ETFs that we have listed, the majority of them are international equity exposure ETFs. And this is really a call to answer that our local investors are looking for. Many local South Africans are looking for offshore exposure without using their foreign allowance. And this is typically for the retail investor. So these foreign equity ETFs are still listed and traded in Rand. However, the investor gets exposure to the offshore market that the ETF is referencing. So that is hugely popular. And I think that is a continuing trend for our local market as investors look for ex-South Africa exposure. To give an indication in terms of themes, so over the last, I would say 5 years or so, we've seen quite interesting, unique exposures come to our market. When I say exposures, I'm talking about asset classes and methodologies and themes specifically. So to date, we have about 18 thematic ETFs, and I've used my own definition when it comes to themes. There is no global definition of what is deemed thematic investing. That's, I think, adopted by everyone globally. But if I had to lump our range of ETFs into a bucket and refer to those as our thematic ETFs, you would see that we have quite a range of technology-based China, India, and Asia, ESG-focused ETFs. More recently, an inclusion and diversity ETF, really focusing on gender representation in the formal market, healthcare and infrastructure being a very topical in South Africa as investors look to gain the upside on the exposure within the infrastructure market. That infrastructure ETF is, however, globally based, so it's not South Africa focused infrastructure. And then I think probably our most popular thematic ETF would be the 4th Industrial Revolution ETF, listed by Signia. That's really taken up by the local market as investors like the messaging, they like the idea of investing in future-proofing, forward-thinking kind of industries. And that ETF gives the investor that opportunity to have that exposure. So I'm not going to touch on this for very long, because I do realize that my colleagues who are following after me will be talking about the benefits and the challenges of ETFs. But I think what I would like to point out to you, this presentation specifically, is that ETFs trade like an ordinary share. They are bought and sold every day. Prices go up and down all the time. So therefore, they're very easy to trade. They're very well regulated in the South African market specifically, but I think that goes to the extent of all ETFs. They are a well-regulated instrument. In South Africa, we also have a tax advantage, and I'll touch on this a little bit later. Not the same tax advantage as what is evident in the US market, but something still that offers a benefit to our local market. I think what would be of interest to the audience today is to talk about, so what are the operational benefits of ETFs? So in turn, the actual product instrument really offers the investor real-time market pricing, real-time portfolio valuation. So for, especially I think a financial professional, that is usually hugely valuable, as that they know the actual value of their client's portfolio holdings. As I mentioned, these are well-regulated instruments. So by their very definition, their assets are ring-fenced and considered insolvency remote. We have the benefit of a central security suppository. In our instance, it'll be straight. In other words, all that administration associated with this listed instrument is done automatically by our CSD. So that really takes away some of the administrative burden that you would typically maybe find within the unlisted space. So something like in a mutual fund market, unit trust market, where you might have teams that do that administration. The mere fact that an ETF is exchange traded, that is automated and that is managed by the CSD. So that is hugely valuable. In our market as well, we have a tax exemption, particularly around ETFs, and we also accommodate collective investment scheme ETFs within our South African tax-free savings accounts as well. And then I just briefly want to talk about the trading benefits of ETFs. The mere fact that all our ETFs on the JSE require a market maker. The market maker's sole responsibility is to facilitate liquidity, to ensure that they are the buyer to every sell and the seller to every buy, if that should be required. So they really try to promote efficient secondary market trading, and there's opportunity to also capitalize on mispricing. So for instance, if the underlying basket ETF is of a particular value and the actual ETF price is of a different value, you could then take hold of the mispricing between the two and essentially arbitrage between the low price of the basket and the high price of the ETF exchange price. But the role of the market maker is really to ensure that those two prices are as fairly aligned as possible so that you don't have as much mispricing. If it's a well-regulated or well-managed, efficient ETF, you would hope that the mispricings are few and far between. And I think this is probably be most valuable for my presentation today, to talk about the uses of ETFs, and particularly how they would fit in within the portfolio management and the risk management of an investor's portfolio. An ETF, because it trades like an ordinary share, can be used within the core satellite strategy. With that, I mean, you could have at the center of your portfolio, you could have a very standard broad market-based ETF, in our case, for instance, the top 40 or NGX top 30. And then you would have individual stocks that would complement the actual holding of the core ETF. That's a really nifty way of putting a very well diversified ETF portfolio together through the use of, a handful of ETFs. Again, because when you apply the look-through principle, you look at the asset class. So these ETFs can really serve as building blocks. So you've got your equity ETF, you've got your fixed income ETF, you've got property and commodity ETFs, really giving you a range of asset classes which you can then include in your portfolio. And again, because these trade simply, it's as easy as just buying today and even selling today. So you can quickly make up your mind which ETF you would like to acquire or dispose of. In certain markets as well, short selling is quite commonplace with ETFs. That is done a little bit in South Africa. It's not as evident, but it is another way of using derivative type exposure through short selling. Particularly in the developed markets as well, ETFs could also be used for pairs trading, going long and going short, and you can essentially manage a pseudo kind of hedge fund strategy through the use again of an ETF. And then what I think is really interesting about an ETF is that it really can take on the benefit of a placeholder. So if you are not certain what you might want to do with the amount of investment cash that you might have laying around, you can opt to, for a short-term period, equitize your money into an ETF, hold it there until you've made up your mind and to say, well, I now want to get out of my equity ETF and I'd like to move into a commodity-based ETF. And the real benefit is that these things trade very easily and very quickly. So it really helps for the investor to make up his mind fairly swiftly at a very low cost, with no massive market movements when making that investment decision. I do want to make the point though is that because these two trade like shares, the prices also can go down depending on what the basket's value is. So if basket performs in a downward trend, the ETF's price would also move down. There are obviously fees involved, and you're not a shareholder when you own an ETF. So if you're not the management company that takes hold of the ETFs and you're an individual investor, you do not have the right to any voting rights, because this is not, even though that trades like a share, it's not a share, unfortunately. And just some other considerations that I think are important when it comes to risk management. Ultimately, the portfolio manager would want to try and keep the total expense ratio, in other words, the running costs associated with the ETF, as low as possible. By keeping it low, it means that the spread, the market making spread, the bid and the offer spread can become narrower. Means that the price is more efficient. It means that it doesn't eat into the investor's returns. So it's up to the market, or up to the manager, the ETF manager, to try and keep the operational costs as low as possible, because that also means their spread is lower, which also then means that the ETF trades more efficiently. In the same breath, when it comes to the tracking area, so where the portfolio manager's responsibility is to ensure that the underlying basket is as closely tracked to the index that it follows. Those friction costs also eat into the return of the investor. So again, it's vital that the portfolio manager does essentially his job well to make sure that the tracking error is as low as possible. Then I think this is really the essence of my message today when we're talking about portfolio diversification, and that's really what an ETF offers, is a plethora of asset classes that can be wrapped in, well, let's take one asset class, a plethora of stocks that can be wrapped up into a particular asset class. It gives the investor diversification across the board. There's different industries, different markets, different geographies, all wrapped up into an ETF. There are multi-asset ETFs available as well, where the portfolio manager associated with the ETF issuer can lump in different asset classes into one single ETF and can actually offer you a fully diversified multi-asset class solution in a single ETF. I think it's important as well for those that would want to use an ETF within the portfolio, is that this diversification benefit has the advantage that it can balance out negative returning assets within the range of securities within the ETF. I think it's important, though, that when acquiring an ETF, because it's a transparent vehicle, that investors have a proper look through to see exactly what's inside the ETF. Very often, if you have very large constituents, say up to 1,900 constituents within an ETF, you can actually lose sight of what is really in that basket. And you do run the risk of perhaps there being duplication of certain stocks, be it within the same industry or the same market, whatever the case might be. So I think it's really important that you make sure what the right blend of securities are within that ETF. But above all, the fact that this is a wrapper that offers you all of those benefits into a single instrument, is no wonder that this is really future thinking kind of investing, because it's simple to access and gives you an immense amount of diversification benefit. This is just to give an example of what I mean in terms of portfolio construction. Again, as I mentioned, because these ETFs are transparent, you can see what the exact composition of the ETF is, what the constituents are, what kind of industry exposure you're getting, what kind of geographical exposure you might be getting. Again, this is just an example. This is not an exact replica of a portfolio that I have maybe lying around, but just to give you an idea. And I think it's important that you try and have you manage the correlations so that there are negative correlations between the different asset classes. So if you have equity, be mindful that you might want to balance it out maybe with some fixed income, even commodity ETFs, to ensure that there's some kind of negative correlation to prevent a one-way trend in your portfolio performance. And again, this is just another example of what you could potentially do, having a single broad market ETF in the center, and then having stocks surrounding it, ultimately to generate alpha. And then just lastly, I want to make you aware that what's happening in our local market. So as recently as October last year, we received approval from our regulator to accommodate the listing of actively managed ETFs in our market. So to date, majority, actually all of our ETFs are all passive investment strategies. But as of October, we are now accommodating active investment strategies. And that was a bit of a tricky kind of thing to get around, because we had to try and balance the idea of protecting the IP of the portfolio manager, but at the same time provide enough information to the investor to make their investment decision, because it is a public market. So balancing that out was a tricky task, but I think we've got it right, and we anticipate to have our first actively managed ETF in the coming weeks. And this is to give you an idea of what kind of disclosure we are opting for, whether daily or quarterly for the portfolio manager. And that is me in a nutshell. I'm not sure whether we have time for any questions, but I'd like to hand over to Ole and maybe let the following presenters take over, please.
Thank you very much, Adele, for the presentation. As you know, you will be part of the panel later on. And so in that forum, we would be posing questions to you there. So, but I think at this point, we'd just like to say thank you for the presentation. Quite a few takeaways there. For me, and I'm sure for many living in Nigeria, one of the things that stood out in your presentation is the use of ETFs to provide offshore exposure in local currency. I thought that was quite interesting. Given the interest of many investors here in Nigeria to invest elsewhere, I imagine that would be a very interesting ETF to list on the NGX someday. But thank you so much for your insights.
My pleasure. Thank you.
Without further ado, I'd like to now welcome to deliver two very brief presentations on the benefits of investing in ETFs. First, we would have Oyelade Egbe. She's the Managing Director of Vertical Fund Managers. And then later on, we would have Oladele Shotubo, who is the CEO of Stanbic IBTC Asset Management. So on that note, I would like to appeal to our presenters to please keep it relatively brief. You both have about 5 minutes to make your presentations. Oyelade, I will yield now to you. Adele, we'll need you to, okay, I was going to say you should stop sharing your screen, but I think Oyelade is doing hers now. It's over to you now. Cheers.
Thank you, Mr. Wale. Good morning, everyone. Please, can you hear me clearly?
Yes, loud and clear.
Awesome, awesome. I honestly, when Adele finished her presentation, I was like wondering what else I would be saying, because she's basically covered almost everything. But I would try to have this as briefly as possible. So Adele has done a very good, introduction by speaking on, what the ETF market looks like globally and how it is represented in Johannesburg Stock Exchange. So I will just speak on ETFs in Nigeria, as well as Adele's introduction. I think Mr. Temeko had also mentioned that, we have 12 ETFs listed in Nigeria. We have, and I've highlighting it over here. So we have ETFs that cover market representative ETFs. We have sector ETFs. We also have ethical ETFs, as well as commodity ETFs and style-based ETFs listed in Nigeria. The current asset under management for ETFs in Nigeria stands at about 7.4 billion in Naira terms. I would also speak on, the ETFs coverage that we have at Vertiva. So we have three major categories of ETFs. We have the market representative ETF and sector-based ETFs. Those are basically equity ETFs, and they reflect representation of securities listed on the Nigerian Capital Market, the NGX. So for the market representative ETF, we have an ETF called the Vetiver Griffin 30 ETF, which is an open-ended exchange-traded fund. It largely represents the NGX 30 index. And the NGX 30 index, as we know, comprises of the 30 most capitalized stocks on the stock exchange. When we look at the market capitalization of the NGX 30, it accounts for over 90% of the NGX all-share index. So basically, we can say it's adequately representative of the market. On the sector end, we have the banking ETF, consumer goods ETF, and industrial ETF. And that basically tracks the sectors mentioned there and the indices which the NGX index covers. For the banking ETF, as the name represents, it covers the NGX banking, securities, Vetiver consumer goods ETF, consumers the NGX consumer goods index, and industrial likewise does the same with the NGX industrial index. So if you're looking at exposure to banking stocks rather than purchase individual banking securities, you can basically invest in a banking ETF and gives you a one large shot exposure to all the securities within the banking index. And it's a quick way of getting a representative investment. And then lastly, we have the fixed income ETF, which is a Vetiver S&P Nigerian Sovereign Bond ETF. And that basically tracks the FMDQ S&P Nigerian Sovereign Bond Index. And likewise, it basically gives you easy access to the bond market, especially where if you were going to purchase a bond, you would have to put in a minimum amount to trade those bonds on the secondary market. Here, you can have easy access to the bond market by just purchasing one ETF. So largely, the ETFs give you an easy access to the market. So over here just shows you a bit of movement in terms of ETF performance over the lives of the ETFs and the way they track the relevant indices. So you can see how the indices and the ETFs move in the same manner. What we've also done is to provide the 2023 performance of the ETFs vis-a-vis the index returns, and we can see here that they're largely close in terms of performance as well. I have limited time, so I won't be able to dwell too much on that. In terms of benefit, Adel has also mentioned quite a number of them. A key thing is transparency. Because you know what the ETFs contain, it's easier for you to make your investment decision. It's easier for you to track the performance. It's easier for you to be comfortable compared to, where you invested in a fund that you do not know the underlying instrument. So for example, just like I mentioned, if you're buying the Vetiver Griffin 30 ETF, you know that you're buying basically a security that is tracking the NGX 30 index, and you know what you're getting. Likewise, if you're buying a banking ETF or industrial ETF, you know what exactly you're getting. An additional benefit is the convenience. So rather than having to pick securities, you can have all the securities embedded in one stock or you're embedded in one ETF. So it gives you easy access. It's convenient. You don't need to give yourself too much of a headache in terms of the securities that you're deciding on. And diversification. I think one of the things that Adel had mentioned is that with ETFs, you can create a blend of portfolios. And I think this is very, very critical and beneficial for investors who are looking at ways to expand their asset allocation. So with ETFs, you can easily invest across various asset allocations without having to pick, those securities. So, for example, just as she was mentioning, if you're creating a portfolio, you can have a core being the market representative ETF, like the VG30 ETF, and then you can have other satellites depending on where you think alpha would be generated. So you can embed maybe a gold ETF on the side. You can put in some sector-based ETFs that gives you maybe where you think you want to pitch your tent. Say, for example, you think the banking sector is going to do well. you can, increase your allocation to the banking sector using the ETF for the Vertiva Banking ETF, for example. I think what is very critical is understanding that, the ETF allows you to express your investment objective in an easy fashion and easy manner, and you're diversifying across various instruments. She's also mentioned lower fees because ETFs, largely in Nigeria, are passive. The management fees you find with ETFs are much lower than you would find with an actively managed fund. I think I've basically discussed this. So this is just basically mentioning all the information I had discussed. It gives you flexibility, and you have the convenience and accessibility. ETFs trade on the stock exchange just like any security. So the same way you buy in Nigeria, let's say an Access Bank or a Dangote or First Bank, it's the same way you would buy the ETF on the floor of the stock exchange. So all you just need to have is a brokerage account with any broker, and you can purchase it off the floor. So you don't need to have access to the fund manager. So it just trades as easily as and simply as possible especially for retail investors. So it gives you convenience of and accessibility as well as diversification, flexibility, transparency, and lower fees. I would quickly speak to, investor access and trading, as with any instrument. So here I'm just trying to explain to investors how you can easily access ETFs and how you can use them and utilize them. But with any investment, as you all know, the first thing is to research what you want, is to understand yourself. They say man know thyself, so you have to know your risk level. You have to be clear about your investment goals. Understand the investment objective that you have, and then understand the ETFs that are available in the market. It's when you understand these things that you'll be able to select the right ETF for yourself, and then look to the underlying holdings of those ETFs and to ensure that those underlyings will tally with your investment goals and objective. Subsequently, you can then consider opening a brokerage account if you do not have one. If you have one, if you have a CSS account, then ETFs are simply traded, and these are largely for the retail. For institutional investors, like Adele had mentioned, there's the in-kind creation, in-kind redemption process for those individuals or institutions buying in a significant amount. They don't necessarily need to trade it on the floor. They can come to the fund manager and the market maker to create securities that are not necessarily going through the NGX for trading. However, for a regular investor, all you just need is a CSS account and you open and then trade it like any securities. Every ETF traded has a symbol, just like we have symbols for other securities listed on the NGX. And so all you just need to do is, if you're using an online platform, place your order, put in the ETF symbol, and then you trade it through your broker's platform. And this will immediately be credited to your CSS account, and you would see it just the same way you see other securities, equities on your CSS account. You would see the ETF as well represented in your CSS statement. And subsequently, I think what is critical with every investment is to continue to monitor your investment. You monitor the performance of the ETF and see that it's in line and aligned with your investment objective and your expectation of the macroeconomy. So you can always rebalance your portfolio. So say, for example, let's say last year you were highly weighted in the banking ETF, for example, and your expectation this year is that things will flip. You can obviously sell the banking ETF and purchase another ETF that you see, and this helps you to reflect your expectation of the market, of the sector, of asset classes as well. I hope I'm within time. And thank you very much.
Thank you so much for the presentation. You did actually run over a little bit, but I'm sure it's still valuable information. Thank you so much for that. And instead of Mr. Dele Shotubo, we will be having Olabode Williams from IBTC to provide further insight into the ETF. So it's over to you, Olabode.
Yes, thank you very much. And thanks, Wally. And really, I think Adele and Oye, you've done a tremendous job in really breaking down the ETF. So I'll just focus on the benefits, and I'm putting up my slide now just to confirm if you can see my slide.
Yes, we can see it.
Yes, we can see it.
But please, I do appeal
to
be brief in the interest of the time that we've allotted for the end. Thank you so much.
Thank you so much.
Oh, no problem, Wally. Now, Adele and we've talked really a lot about the ETF, so I'll just focus on the benefits really. So the structure of the ETF, really gives a unique advantage to ETF as compared to direct investment in stocks, or even if you look at mutual funds. It offers diversification and the fact that you can trade it with ease as well. And ETF is a basket of stocks or any instrument. It could be fixed income instrument or stock or even other type of asset class. Now, in terms of diversification, just drilling down and adding to what Adele and Louis has said, one ETF is a basket of many stocks, and instantly by buying one ETF, you already have a diversified portfolio. And what a diversified portfolio means is that you have reduced risk, and that is very important when you're making investment decision. And I think that appeals a lot to retail investors, even for institutional investors as well. The other thing is ease of trading. And we've mentioned that you can trade your ETF, as the way you trade stocks. But what that also means is that one ETF gives you instant, exposure either to a market performance or to a sector or to a theme or to a factor like we've discussed. And in terms of exiting also, it enables you to exit instantly. Now, just imagine when you want to trade maybe 30 stocks or 40 stocks as against trading one stock, and that is there for you. And in terms of cost as well, you can look at cost in, apart from the typical trading cost, because when you look at trading one stock comparing to, for example, for stock to trading 40 or 30 stocks, definitely the cost is lower. But not just on that, when you also compare to the likes of mutual funds, the expense ratio is typically lower because it's a passive portfolio, right? It's a passive investment. And also for the retail investor, it means that with a lower investable funds, you can actually still have access to a wide range of stock or a wide range of instrument all at once, right? When you look at the price of some stocks in the market, there are over 1,000 naira. So it means that if you have a limited amount of investable funds, ETFs gives you an advantage to still have exposure to a large variety of stocks and their performance in the market. And then when you look at strategy, so for institutional investors and even for retail investors, you want to express your strategy. And your strategy could be factor-based, it could be sector-based, like we had mentioned, and it could be thematic, like Adele also mentioned, focusing on different aspects, either healthcare, infrastructure, ESG. An ETF enables you to really express that strategy and even optimize that strategy. And while doing that, you have the ease of trading, you have the lower cost, and also it enables you to minimize what we call an implementation shortfall. That is the time lag between when you make a decision to trade a particular instrument and the time it takes you to actually get into position. When you buy an ETF, that is an instant exposure, as against when you have to implement over a period of time, and the market could have moved either way before you are able to complete that particular trade. And so the use case for ETF is, it's very interesting. From a retail investor to passive investor, even to sophisticated institutional investor. And like Adele had mentioned, as the market deepens, we're able to create more indices that ETFs can track. And what that means is that we're able to have more sophisticated strategy that investors, yes, that portfolio investors can replicate. And then Just to talk briefly about the ETFs that we have in Stanbic IBTC Asset Management, we have two, the Stanbic IBTC ETF 30 and the ETF 40. The ETF 30 mirrors the NGX 30 index, which is an index of the top most liquid 30 stocks in the on the Nigerian Stock Exchange. And when you look at the price trend, you can see how closely the the index and the ETFs have been tracking over a period of time. And also just to portray the fact that you have exposure to the performance of the underlying index, you can see the historical performance of the ETF 30, and you can see how close it is to the underlying to the index for over a period of time. And for the ETF 40 as well, it replicates as closely as possible top stocks on the ASI as well. But also importantly, it's like the investable universe for pension fund administrator. So if you want to replicate or you want to mimic what pension funds are doing, the ETF 40 or the NGX 40 is the mirror image of what pension funds are doing, and it gives you exposure to the performance of what pension funds are doing in terms of the equities. And you can see on the right-hand side as well, the historical performance and as well as the price trend over a period of time. The tight line between the index and the NAVs really, reveal the fact that the tracking error is very, very small, which is the aim of the index, which is the aim of an ETF, to reduce to the barest minimum the tracking error between the index and the ETFs. Now, in terms of how to invest,
if you can hear me,
yes,
if you can please help us begin to wind it down.
Oh, okay, fine. This is my last slide. Thank you. This is my last slide. And so in terms of ownership, and I think we have really mentioned this, you just open a stockbroking account, and you can contact your stockbroker to put in a trade for the desired unit of ETF that you want to have exposure to. And in terms of disposal as well, you can put in a trade to your stockbroker to sell the desired unit. And if you're unable to do that, you can of course contact the fund manager who can create the desired unit of the ETFs for you. And just to mention, lastly, that for investors that do not have experience in investments in equities, it is important that you talk to your financial advisor who is able to provide guidance in terms of investment in the asset before you go ahead to make investment. So thank you. I think I'll just leave it at that. Over to you, Wally.
Thank you very much.
Thank you very much.
Very valuable insight into how we can get invested in ETFs. But if you don't mind, I'm hearing an echo.
No problem doing that.
Okay. So I think that has been very valuable learning up to this point. I would also like to mention to all our participants, I do know that many have been trying to get onto the chat field. I've been told that it should be enabled very shortly, and so that you can also share your perspective. But as we transit into the panel conversation, I want to emphasize that it's more valuable for you to type in your questions or comment in the Q&A field so they don't get lost in the chat. So please help us out by doing just that. And on that note, I'd like to now invite to moderate the panel session, which will be themed ETFs in the Nigerian capital market and its regulatory landscape. We have the pleasure of inviting Ms. Chidima Chukwueke Okolo, who is Head Product Development at the NGX, to lead this conversation. I yield now to Chidima. It's over to you to invite your panelists.
Thank you very much, Wale, and good morning. And thank you all for joining us this morning. Like Wale had said, my name is Chidima Chukwueke Okolo, and I'll be the moderator for this panel discussion. I think we've begun this webinar taking in a wealth of information from our speakers, Adele Oyedele and Olabode, on the various constructs of the ETF product, which will help form a basis for what we would expect to be a very interactive panel discussion. Like Wale had said, the topic for today's panel discussion is ETFs in the Nigerian capital market and its regulatory landscape. We hope to gain insights into the ETF landscape in Nigeria and have the stakeholders address challenges experienced by both issuers issuing the ETFs as well as investors. So with us, I'd like to, to help us delve further into this topic, I'd like to introduce our distinguished panelists. First, we have Ms. Rabi Maidawa, the Divisional Head, Fund Supervision at the Securities and Exchange Commission. We have Mr. Adeyinka Shonekon, the Divisional Head, Business Development and Sales at CSCS, the Depository. We have Mr. Aigo Aig Imokode, the President, Fund Managers Association of Nigeria. We have Mr. Norna Awo, the Chief Equity Analyst and CEO of Palese Capital Market Association. We have Ms. Laura Fisayo Kolawode, the Head, Equities and Alternative Asset Solutions at FBM Quest Asset Management. We also have Mr. Ndako Mijindadi, the Head Investment and Research at Lotus Capital, as well as our speakers from earlier, Adele, Olabode, and Oyelede will be joining us. So without further ado, I'd like to come to you first, Ike. I don't understand what you would describe as the major challenges facing exchange-traded funds in the Nigerian capital markets, just from an issuer's perspective.
Thank you. So from an issuer's perspective, there are several challenges facing the ETFs in the Nigerian capital market, and some of these are in no particular order. So firstly, I'd like to speak to lack of investor education. Many investors in the Nigerian retail segment are not as familiar with ETFs and their benefits, and this can make it challenging for issuers to market and promote these products effectively. And then there are issues around liquidity challenges. Compared to other asset classes, the liquidity of the Nigerian ETF market is relatively low. And this can create challenges for issuers in terms of managing the creation and redemption process, accommodating investor redemptions, if to accommodate investor redemptions, ETF issuers must be able to buy and sell the underlying assets of their funds. And the issuer might need to keep a higher cash buffer on hand to cover future redemptions. And if the underlying assets are extremely difficult to sell or illiquid, well, while these challenges are somewhat addressed with the use of liquidity providers, there can be margin requirements for the issuers, which may result to a rise in costs. There are counterparty challenges. So in the manner in which ETFs run, to get exposure to specific asset classes, issuers may enter into swap agreements or other derivative forms of transactions. And the issuers may be required from time to time to post collateral under these contracts, which could raise the margin requirements. And this could also affect there's the effect of counterparty defaults. And this means the issuer might have to deposit more collateral, which could further raise their margin needs. And then, of course, there's the macroeconomic environment. I would like to say unstable. It's just the market economic environment with its inherent risks, such as market volatility, credit risk, interest rates, currency rates, volatility, oil prices and commodity volatilities, and so on. So for instance, as we know, 10 out of the 12 listed ETFs are equity-based ETFs. So their performances are therefore dependent on the performance of the Nigerian Stock Exchange, which of course is dependent on the macroeconomic environment. Market volatility during times of market turbulence may cause ETF issuers to be subject to higher margin requirements as the value of the underlying assets may move rapidly. And this may raise the cost for the issuer and lower profitability. Of course, there are high operational challenges and costs. So ETF issuers may face operational challenges such as managing the underlying assets in an ETF, creating and redeeming ETF shares, and maintaining accurate pricing of the ETFs. These challenges would increase costs to the ETF issuance, and it may be more difficult to manage these products efficiently. And then the regulatory hurdles. So the ETF market is highly regulated, and so it limits the fees that issuers can charge. ETF issuers in Nigeria must comply with various regulatory requirements and changes to the rules that occur from time to time as are required, which can add complexity and cost to the product offering and stiffen the operations of the operations of the fund manager. So furthermore, regulatory challenges can impact the fees that the ETF requires, the issuers require or are able to charge. So for example, new regulations can require a greater disclosure or increased oversight or other things that can increase the cost of running the ETF, which could lead to higher fees. So managing ETFs can be expensive, with issuers incurring various costs associated with portfolio management, market, legal, compliance, and so on, administrative tasks. I won't go into, I think we're pressed for time. I'm not going to go into the costs now. If we need to, we can do that. So, these are just challenges, some of the challenges that are facing issuers now.
Thank you, Ike, for that. You've listed a number of challenges that we face, and these are things that we need to address across the market as a whole, both on the issuer side and on the regulators side, where we could both add to overcome these challenges. But with that, I'd like to come to you, Laura. We've spoken about the challenges, like I had mentioned, but we want to talk about the current size of the ETF market and the growth options. What do you think the key drivers of asset growth in the ETF industry? In the medium to long term, what do you think the key drivers could be, albeit the challenges that some of the challenges that I had mentioned?
Thank you so much, Chidima. So ETFs for me are really game changers, right? And there are so many factors that drive the popularity. So when you were speaking, when you started talking, you said that we have taken in a wealth of information from our speakers, and that really spoke to me because that's what I've done. So to hear, for example, that they only started in 1990, and to see what they have become today, I can see why the drivers that I've thought about will really lead to growth in the future. So, ETFs, I think, are changing, are evolving. When Adele was speaking, she spoke about the fact that, it's really moved from passive, a sort of passive model, to becoming increasingly active. She touched on that. She touched on the fact that they're becoming a lot more diverse. That innovation, in addition to some of the basic goods of ETFs, is really what's driving that growth. We're seeing the emergence of fixed income ETFs. We're seeing ESG ETFs emerging globally. If you think about it, the NGX, for example, has a governance index, which I think provides room for a local ESG themed type of ETF. We're seeing active ETFs. So, all of these factors will really underlie the potential of the industry. So if I think of the very first factor that comes to mind when I think of the benefit of ETFs, it will really be about their liquidity and what they mean for investors accessing markets, because they're really highly scalable. So they offer you easy access in and out of a market. So if you think about wanting to get exposure to a broad market index, like say the NGX ASI, the crude way of doing that will be to go and buy a single stock of each of the companies listed on the index. But obviously it takes a lot of time, and that's a very costly exercise. But with an ETF, and Oyelade touched on this as well, you can buy a single stock of the relevant ETF and you have that exposure. It is much easier, it is cheaper, it is a lot more efficient. You're not paying transaction charges on individual trades, you're paying that on a single ETF trade. And so even if you have a limited amount of money, you're still able to express a strategy that you want to express, like say getting NGX ASI exposure, right? Very, very cheaply. And I think this point leads to the next benefit, which is really around choice, around diversification. Because again, ETFs really allow you to access a broad range of markets easily. Okay, so ultimately you are able to track from the most liquid markets to the most specialized markets. Mr. Temi, during his initial remarks, talked about the fact that we have 12 ETFs locally. And investors in Nigeria are able to track, the NGX 30, we're able to track the bond market, we're able to track, he mentioned the commodity ETF. We have ethical ETFs, specialized ETFs that track themes like growth and value. That's a growth area. That shows that there is something there. When Adele was speaking, she spoke about them having 95 ETFs across 7 issuers in South Africa. Yes, they're mostly equity-based, but she spoke about the fact that they are providing mostly offshore exposure, which I think is very exciting. And Wole touched on that as well, which is very exciting for local investors, at least here in Nigeria. And so the fact that ETFs can allow you and help you track broad global indices, local indices, themes, styles, markets, from the liquid to the non-liquid, I think is perhaps a real benefit, very tangible benefit. Thirdly, I think investors themselves are changing. We are now beginning to see that ETFs allow investors to sort of blend active and passive styles. So you can use a basket of passive instruments. You can actively manage a basket of passive instruments to help you beat the market in the long run in a cheap way. And really, this aligns with market research that has told us that over the long term, allocation of your assets is perhaps more important than individual stock selection in driving long-term returns. And so you can see the wisdom in using ETFs as building blocks, as an active manager even, to access long-term returns. And this is all helped by the fact that, and this has been touched on by Adele, by Oyelade as well, the cost of ETFs, they are so cheap. And essentially, it is a cheap way of building broad exposure. And so even as financial advisors, when the advice is going out to clients, and as we better understand ETF markets, as we better understand the choice, the variety, the cost advantages, I think that the advice that is being given to clients is changing. When Adele was speaking, she talked about the fact that ETFs are also, or can be, a great placeholder for cash, whilst you're still deciding what stocks you want to buy. Thoughts like that, processes like that are really what's helping us as financial advisors change the things that we are telling our clients. We're helping our clients get broad market exposure, get active exposure using passive instruments. It really is changing how we're managing portfolios. And yes, historically, they have focused on equity markets, but I think that we're beginning to see the emergence of bond ETFs. If you think about what bond ETFs do for us, again, it really means that you're able to democratize almost what is traditionally an expensive market to access, especially locally, but I think even globally. Because ultimately, generally bonds, you need to have usually a large capital base to access bond markets, but ETFs are really changing that. It's an efficient way to get access to a market that's otherwise a bit difficult to access, perhaps, expensive to access. But, just the themes and the way ETFs are changing, I think, frankly, as I was making furiousness when Adele was speaking, the one thing that told me that where growth was coming from is innovation. Infrastructure, ESG, and so on and so forth, real estate, multi-asset ETFs, offshore exposure. I think that is really what will drive the growth in our local market for ETFs.
Thank you so much. Thank you so much for that, Laura. And we know that FBN have a few ETFs coming to the market, so we're looking forward to the contribution that will make to the size of the ETF market. So very briefly, just in a couple of minutes, I'd like to come to you, Oyedele, again. I know that I had mentioned a number of challenges, but I want to drill down on the operational challenges that ETF issuers might face, being an issuer in the market of 5 ETFs. Just 1 or 2 points. What are the key challenges operationally that ETF issuers face, and perhaps how the regulators, NGX and the SEC, can help ease some of these challenges?
Okay, thank you, Chidima. In terms of operational challenges that we face, I would start with investor education and investor participation. So what we notice is that most of the participants are more of the retail. So forums like this help in providing access of information to institutions, especially like PFAs, to participate more in the use of this instrument. Because it forms part of the growth of the market. A second operational challenge we have is liquidity. The depth of the instruments available is also dependent, especially in the equities market, on the liquidity of the instruments. So sometimes, you do have challenges in terms of rebalancing, depending on, what kind of securities are within the index. But, this is definitely it's improving. As our market deepens as well. Another challenge that we typically face in terms of operational would be in areas of, just general support by stakeholders. Sometimes you feel like, the market sees the instrument as a particular fund manager's instrument, not necessarily seeing it as an instrument that belongs to the market. So it would be, why should I buy an ETF? Because it's a Vertiva instrument. So when they're discussing with their customers or their clients, they don't necessarily explain it as an instrument that can assist them in making investment decisions that are profitable and efficient for the investors. So it's more about, other brokers probably marketing directly, buying the individual securities, rather than buying a more efficient manner using ETFs to express their investment decisions. In terms of regulatory requirements, there's the regulatory burden, and then obviously the regulatory cost as well. And in that instance, we would appreciate, we know we're constantly in discussions with the NGX and the SEC around the fees, and we're very glad that they're open ears. But we can always improve better on this. Thank you.
Thank you so much for that, Yolede. I think we've taken some of that in, and with that, I'd actually like to come to Ms. Rabi from the SEC, and not to put you under too much pressure, but a lot of challenges that both Oyedele and I have mentioned have been around investor education, liquidity, the costs, the fees associated with issuing ETFs. So as the Apex regulator, what are you doing to kind of ease the bottlenecks faced by these potential issuers, given the challenges that they've mentioned?
Thank you very much, Chidima. And I'm glad that this forum is organized, and the issuers, as well as all other investors and participants, are also part of this forum. And I hear Ike Emokwade clearly, and also Oyelade, concerning regulatory challenge, but I hear across board what has been a bane on the development of ETFs for me, like I hear every other speaker mention, is the liquidity and investor education, because it's liquidity that drives this market. Are there market makers for these ETFs that are listed on the market? Because that will be the major driver to investor performance. Another thing, well, zeroing up on the regulatory challenges, like Mr. Ike has mentioned, and also Oyelade, the issue of fees. And I'm glad that Oyelade mentioned that the regulator is open to suggestion, and it's listening, and it's adhering to market demands, because the Commission had in the recent past reduce its regulatory fees to the BRS minimum, okay? Because filing and application fees have already been eliminated, and the issuer is expected to pay as little as 0.05% of a 5 billion worth of a fund. The Commission has also taken steps to also reduce some incidental cost of issuance by eliminating the use of receiving bankers to an IPO, by amending the rules such that application monies goes directly to the fund custody account, And another thing I would like to also mention here is the issue of the participation. According to the Commission's rules, the ETFs are basically classified as specialized funds, which are ordinarily targeted at qualified investors and high net worth individuals. But the Commission has allowed participation of retail investors in ETFs so as to drive the market. So what I will consider more to be a challenge, which may not necessarily be regulatory, like I said, and which I hear across board, is the lack of investor education and participation, particularly with regards to qualified investors, as how active are the managers, the fund managers, the issuers now, that creates this index in the use of fintechs, because to onboard millennials and Gen Zs, for example, and also to drive PFA's participation, because the regulatory framework is robust, and that it also covers the pension reform acts, So PFS, ETFs are funds that can, PFS can fully participate in. So with I think those are the issues. Then, of course, the issue of the greater disclosure. Now, it is important we speak to greater disclosure because the Commission is saddled with the responsibility of investor education. And I hear that our market, which we also know, that the ETFs is basically more like a retail base, as in retail driven, because the participation of the QIs and high net worths is actually minimal. So it is very important in order to protect investors that the Commission pays attention to the details or to disclosure requirements that are provided in these offer documents. However, the Commission does not provide this rigorous review on ETFs that are targeted at qualified investors. These are all steps the Commission have taken to ease entrance and also participation in ETFs.
Thank you so much for that, Ms. Rabi. I mean, it's encouraging to hear, how the SEC is addressing a lot of these challenges and things that are being put in place to help the markets. So with that, I would like to turn it over to the other side of the market, the investors. And I'd like to ask Mr. Awo. I know that Laura had mentioned that obviously there are more retail investors than institutional investors in the market, which a lot of people might find surprising. I mean, that's the topic for another day. Why are the institutional guys, the PFA guys, not as invested in the market as they should be? We'll probably have a whole other webinar on that. But with retail participation, generally it's still low compared to other jurisdictions. So what do you think can be done, to encourage more retail participation? And what are your suggestions for opening up the ETF capital market to more retail investors, Mr. Awo? Sorry, is Mr. Awo on the call still? You might need to unmute, Mr. Awo, sorry. So we can hear you. Yes, please unmute your mic. We still can't hear you. Okay, maybe while we wait for him, I'll just we'll take him out to the next panelist. I'd like to come to Ndako from Lotus Capital. We talked, ETFs allow investors to benchmark and gain exposure to a variety of underlying instruments. So I want to ask you if you can share your thoughts on issuance of ethical ETFs and fixed income instruments as an underlying, and the possible challenges and opportunities you will see with such instruments.
All right. Thank you. Just to confirm that you can hear me.
Yes, I can. Please go on, Ndako.
All right, great. So for the ethical space, we've seen significant growth in recent times. Because ETFs are built on underlying assets, the growth of the ETF market itself is dependent on the growth on those underlying assets. At Lotus Capital, we came out with the share compliant ETF for equities because the equities market was robust. We've seen that since this time, there is strong investor appetite for fixed income securities. And that has led to the issuance of Sukuk bonds by various issuers. So clearly, as that market expands, the capacity to build indices and ETFs on the back of it, also expands. It's important to note that there would be definitely challenges, like you highlighted. First of all, is how many of these underlying instruments are there? A number of the participants have talked about issues around illiquidity of the instruments because of the underlying assets, the capacity for the ETF itself to grow if the underlying assets don't grow very quickly. Right now, I can say that the journey is ongoing. We have a number of sovereign issuances. We have a number of corporate issuances that can be used to build a basket of portfolios. Some of these issuances are very landmark. and serve the basis for other issuers to come to market. So the challenges that I believe that we're going to see would be the ability to create certain categories or subcategories because of the assets, because the assets are very limited. So for instance, if you wanted to do a fixed income ETF, it would be hard at present to segregate it to say maybe sovereign only, or maybe one particular investment grade only, things like that. It would have to probably be something that is more of a composite in the beginning, which is fine. It will give investors the access that they need to fixed income securities in general. And as the market or the underlying grows, then those subcategories can also grow. With regards to liquidity, I think Laura also mentioned that for fixed income securities, the entry level, sometimes can be very high. So you don't get a lot of participation. But if you have an ETF that has brought the securities together, has created smaller units, you can get better liquidity within the ETF by bringing in investors at a smaller amount. So yes, the fixed income ETF will serve to address some of these challenges. So we're quite hopeful that the development that we've seen in the non-interest space, especially around fixed income securities, cutting across corporate issuers, sovereign issuers, will be something that will lead to future ETFs. And one of the things that has also given us the comfort is when we look at the mutual fund space itself, coming over the last 5 years, the amount of share compliant mutual funds that have come into our market have been quite phenomenal. We now have about 9 of those funds. We have a share compliant REIT, so the market is really interesting and we're looking forward to what is to come.
Great. Thank you for that, Ndako. I mean, it's good to hear that, ETFs will be able to help to bridge that gap facing with insufficient, share compliance instruments. And we hope that you guys will be able to bring in a bit more of those instruments to market, especially given all you said around the fixed income ETFs. I don't know if Mr. Awol can speak at this time. Mr. Awol, please, are you able to unmute?
I should think so.
All right, sir. Good morning. So I just pose the question back to we're talking about retail participation. I wanted to know what could be done differently to encourage more retail participation in ETFs and what your suggestions are for deepening the ETF market from a retail perspective.
Okay, I think it would be important to take the source of ETF in Nigeria from the mutual funds that we've had over the years. And when you have that type of understanding, then you begin to also understand why ETF hasn't done as much as one would have expected it to do in our country. So in that regard, I'm happy that SEC did recognize the fact that they have a responsibility to investors' education. But I think it's not something that they want to do in isolation of other markets operators. Because yes, the issuers and the issuers have a responsibility to educate, but that education stops at the point in which all of these filings and post-filing is done. So it will be important that we see SEC play a much bigger role in investors' education. Don't also forget that equity market globally is not all commerce game. And given the size of even listed company in our environment and given the level of involvement, it will be important that SEC devotes more money, not necessarily in quantum, but also in value-adding education outlets, not necessarily what they're currently doing. And the reason that that is important is the fact that if you look at even the 12 ETF that we have in Nigeria, and you ask for what is the total involvement of investors, that itself will begin to tell the story much more than just talk about 12. So let's find a situation around how people are educated around this product. That itself will help. It's also important that in all of this, that SEC itself needs to also understand the mindset of the retail investor in our environment. Because one of the things you'll find is to think that one size fits all is what the corporate investors or institutional investors will need. That is also what the retail investors will need. That will not be very correct. because if you also take a look at both sides of the market from that point, you'll find that there are two different, yes, they are all investors with aim being that they want to make money, but the attitude to making money are also very different. So that for me will also be a major challenge going forward. But not also let's forget the fact that because of the way mutual funds have gone, it may also be interesting for issuers and the issuing houses to begin to talk around what happened in case of delisting, because that itself is becoming a major problem in our markets. Because ETF can also go under, again, depending on what nature of the segment of the market they are also investing in. So in all, I think the bottom line is that education, education, education. Thank you.
Thank you for that, Mr. Awo. And investor education seems to be a resonating factor across this product line, which is probably why we're having this webinar as well, and contributing to that investor education capacity building. So with that, I'd like to come to Yinka at the CSCS. I know we've talked about investor education, but from the investor side of things, are there any recent innovations by the CSD to help improve this retail participation in the ETF market, and also maybe also look at how to improve the experience of the issuers in the market as well?
Okay. Morning, everyone. Thanks, Chidima, and thank you for the NGX giving us the opportunity at the CSCS to come and highlight some of the innovations that we are driving to improve market participation in ETFs specifically. So, as we know in CSCS, we are very technology driven, and we are using technology to drive how we serve our clients. Technology is very important with the discussions that we've had today around the onboarding of investors for ETFs. So, I mean, we have developed various APIs over the years, and past months to also help improve this onboarding process. We have account opening APIs with brokers and also other APIs around ISIN code issuers that help to also enhance this process and make it a bit more seamless. Also, we have also done various collaborations with issuers around subscription portals and means for people to be able to do some of these investments and ETFs on ETFs as well. In most important is the one around the collaboration we had with the DMO for the savings bond subscription portal that we are developing with them, and also for this subscription for Sukuk, which should be coming live soon. And then also in particular is the initiative based on the response around changing appetite for prompter settlement by retail investors. The CSCS has been driving the initiative to reduce the settlement circle from T+3 to either T+2 or T+1. We've had various engagements with various market stakeholders around this. We've gotten positive and also some enlightening feedbacks around this from various stakeholders. Where we are presently is now we are forming a market committee that will look into how to implement this in an efficient manner that will cause proper and better and efficient settlement circle in the market. Chidima, I think that gives us a summary of what we are doing at the CSCS.
That is great. Thank you for that. I mean, I think a lot of people have beginning to see some of the impacts, not just on the ETF, but, the other products as well. So it's exciting to hear that these things have been put in place by the CSCS. Just very quickly, because I know we're running out of time, but I'd like to come to you, Adele. You've heard a lot of the things that the speakers have said around challenges on both the issuer and the investors facing a market. What suggestions do you have for ETF space in Nigeria? Just drawing from the learnings and the progress that you've made in South Africa. Just very briefly, 1 or 2 points that you can share with us before.
Okay, thank you. So I'll try and be brief. So I can't reiterate this anymore. ETF education, hands down, by the issuer, by market participants, even the exchange. I think that's paramount. You don't have the foot soldiers that you would be associated with mutual funds and unit trusts, people that knock on people's doors. So you have to rely on something else to try and get the message out there, because ETFs are not typically sold by financial advisors in our market specifically. I think from an ETF issuer side as well, offering something unique, I think is quite compelling. if there's an interesting, simple message around they're offering something that offers unusual or hard to get access asset class exposure, I think that really works. So something like rhodium or the fourth industrial revolution, messaging around that I think is very attractive. Access points are important. How do investors gain access to these ETFs? We've seen in our market some of our very innovative local brokerages that have partnered with ETF issuers and have made it possible to have really easy access to ETFs at a very low cost that permits really small amounts to be invested in. So you're not talking the large amounts, you know, these could be typically pocket change that you might have lying around that you could utilize to actually invest in these ETFs. So I think that's important, the access points. Pricing, make these ETFs as cheap as possible. I know it's difficult, particularly if it's an ETF that still needs to build scale, but I think some of our local issuers have decided to take the shot on the chin and decrease their pricing as much as they can. And they've seen growth in their market specifically. And then I think the biggest catalyst that we've seen in our markets is around the regulatory side. So in 2017, our central bank issued a circular that essentially allowed our locally registered collective investment scheme managers to inwardly list foreign referenced asset ETFs. So, and with that being said, is that they could now make full offshore exposure in an ETF without utilizing their offshore limits. So currently in terms of Reg 28, our institutional investors are limited as to how much offshore exposure they're allowed. This exemption removed that. And because of that, we just saw a flood of offshore asset class ETFs into our market. And then I think just lastly would be our tax-free savings account, which is again aimed at the retail investor. It's a really cost-effective way to save using an ETF, and you have the tax benefit of no dividend tax, no interest income tax, no capital gains tax. There is an annual limit to amount that you can contribute, but I think that's really made an impact on the growth of our local ETF market.
Great, thank you for that, Adele. I think particularly exciting, I think for everyone on this call, is the information around your foreign ETFs and how they, help to grow the market. I know it's an instrument that lots of investors in our market are also looking up. I think time is up. I was actually going to ask Olabode a question, but I think we can take it in the Q&A session if that's okay. So similar to the Q&A question that the questions we've seen in the Q&A. So thank you very much, everyone, for this very, very riveting and informative panel session we've had. Thank you for participating. And I hope the listeners have gained some more insight into our markets here at Nigerian ETF Market. Thank you very much.
Thank you very much, Chidima, and to all our panelists for the insights you provided on this very important topic as we continue to try to deepen the Nigerian capital markets in terms of the product offerings. Many thanks indeed. And I can see clearly that there's a lot of interest in the product from the questions and comments that we're seeing in the Q&A field and also in the chat field. I want to just remind again all our participants that if you would like to pose a question, please do so in the Q&A field. If you are posing it to a particular person, you can do so. Otherwise, you can simply just pose your question and we'll simply throw it out there to our panelists to try and address them. So we have many very similar questions. There are two I'd like to start with. The first is, typically we've talked a lot about the benefits, the pros of investing in ETFs, but one person is wondering, and I guess just being cautious, are there any negatives or cons? Potentially, are there things that we should be mindful of going into this asset class, considering that it's not very popular in Nigeria? I wonder if any of the panelists, and then perhaps maybe Adele, given your experience with the asset class in South Africa, what should investors be aware of, if anything?
Okay.
Yes, go ahead, Adele.
Thank you. So I'll just be brief. So I think one is mindful that investors need to take into account is, again, these ETFs trade like an ordinary share. So prices will go up and down. So if you're going into a passive tracking strategy and you have no other hedging mechanisms around you, and now you're just taking a view on where the market is going, you have to be mindful that prices will go up and they will go down. So if you are there for the long term, typically the message is to stick to it and just let the market flow. But I think that's one thing for investors to be mindful of. Other thing is that not all ETFs are created equal. So you might have, in our market as an example, we've got 3 S&P 500 ETFs. So on the face of it, they seem identical, but when you look at how they're put together, the one is actually a feeder fund ETF. So it actually references an S&P 500 ETF listed in another market. The other one is the actual S&P 500 index. And all of them have different pricing. So if you are conscious of your returns, you would probably want to choose an investment option that has the lowest cost associated with that ETF. So if you had to choose between the 3, so I think that's so the cost, the fact that prices go up and down, I think is another thing to remember. I saw some comments in the chat as well about dividends. So some of the ETFs
I was just going to get to that.
Are total return ETFs. In other words, the dividends are reinvested into the fund. So you as an investor need to be mindful of that, if you select to do that, then all of that is reinvested into the fund as part of the assets under management. But then in our market, we do have the option of asking that the dividend is paid out as well. So if you are looking at an ETF from not just a capital growth perspective, but from a dividend growth perspective, I think those are some of the things that you also need to consider.
Thank you very much for that. Very, very valuable indeed. And I was just going to get to the point about dividends, so it's great that you've covered that already. Moving on to other questions. And there is a question specifically for Olabode, even though he didn't participate much in the panel, but someone is asking, where can investors find the NAV and price of the Stanbic ETF 30, for example, to determine whether it's trading at a premium or a discount? So where do I get information?
But thank you. So we publish the information daily on our website. You have the NAV prices and all the constituents of the ETF, and even information on the ETF as well. They are all on our website and they are updated daily. So you can get very up-to-date information there.
Good to know. And I imagine, other managers will be the same. All right. Before we move on, there is an ETF conference poll, if you like, and you should be seeing it on your screen right now. And we'd like all our attendees to just take a moment to type in their answers to the questions, and we'll be sharing the results later on. The first question, which of the following options does not indicate how to invest in ETFs? So you have 4 options there. Go to the Chartered Institute of Stockbrokers, CIS, to invest in an ETF, open a brokerage account. There is also research potential ETFs investments. And the third just says choice 3. I'm not sure exactly what that means, but then I imagine the answer is in there. So I'm sure if you've been paying attention, you should be able to select the one that should be correct, at least from your perspective. The second question is, where can you buy ETFs? Is it at the CSCS, is it at the Nigerian Exchange, or Balogun Markets? Right. So a bit of a hilarious choice there, if you ask me. And then how many ETFs are listed on the NGX? I mentioned this at the top of the event if you were paying attention. So please fill that out if you can. Next question is, choose the appropriate options that indicate the benefits of ETFs over individual stocks. So you have several options there. And then who is the largest issuer of ETFs by assets under management in the Nigerian capital market? I'm sure many will hazard a guess. Perhaps you might know. Please fill that all out, and we would get to unveil the responses later on. Okay, moving on now.
Sorry.
Yes.
The issue of what to look out for. I think it's important that this is stressed.
Sure.
If you look at our environment, one of the things you'll find, people are looking for high yield. Certainly, ETF is not what you've been Don't compare it to what you get in money markets. I think this is important. And then the second area that I also think that we should draw investors' attention to is the fact that in terms of voting rights, okay, you don't have the form of rights that you have when you hold a direct company's equity. This is also important that is stressed. Other than that, I also want to agree with the lady from South Africa that yes, because all instruments are basically not the same. There's some level of difference in character. And once you can identify those differences, it helps our understanding of the instrument that we carry. Thank you.
That's right. Thank you so much for sharing that. I think it's very important, especially for those who are not acquainted at all with this product. There's another question here that goes, can one use existing stockbroking and CSS accounts to do ETF transactions? Perhaps we could hear from any other panelists to chime in on that point. How do we actually get invested? Any takers? Maybe one of maybe somebody from perhaps Bode or
okay, so
okay, Ike, please go ahead.
Mike, please go ahead.
Yes, really, a stockbroking account is a stockbroking account. And so yes, you can use an existing stockbroking account. You do not need to open a separate stockbroking account to trade in the ETF. So with your existing stockbroking account, all you need to do is just to send an instruction to your stockbroker to purchase or to buy any desired units, and they will get it done.
Right. Thank you for that.
Thank you for that.
And going now back to our fund managers, perhaps any of you can chime in on this one. What is the expense ratio of each of the ETFs traded in the NGX? I imagine to the extent that you can comment on that, perhaps the ETFs that you are directly responsible for managing, perhaps we could get some comments on that. On the expense ratio.
Thank you.
Yes,
thank
go ahead.
You, Wale.
Can't seem to hear you right now, Oyade. Oyelade. Okay. Unfortunately, we cannot hear you right now. It must be a connection problem. So hopefully you can come back to share some perspective on that. Okay, another question. I think someone who wants to even take more risk. Does the Nigerian market allow trading on margin for ETFs? And how does this work? So can we leverage to get invested in ETFs in Nigeria? Any comments from any of our panelists on that?
Thanks, Wale. Wale, I think I can take
okay.
that.
Yes, Jude, please, by all means.
So, the way the margin is configured in Nigeria at the moment, it's really around equities, direct equities that are listed, that allows investors to leverage utilizing already listed equities to trade. And there's a list of marginable securities that have been approved by the central bank and administered by the Securities and Exchange Commission. Those are the only authorized instruments that are marginable in our markets.
Okay, thank you for that. Another question goes, is the ETF constrained to a particular class of assets? As per most products introduced here seem to focus on a sector or a particular asset class. So how can we go with this? Laura, would you like to chime in on this? Any constraints to the type of ETFs that can evolve in the Nigerian context specifically?
Okay, so I don't think, I mean, so when you think about what we have currently, we have ETFs that track the broad NGX 30, we have bond ETF, we have ETFs that track themes like growth and value, we have a commodity ETF, we have ethical ETFs. So this tells me that there is a broad range that can be done by market participants, by operators. Yes, you might not have 20 commodity ETFs, but that is not because you can't have a commodity ETF, but you don't have people who have created 20. So it really means that as operators, it is for us to look within the things that are available, the various asset classes and markets, the indices that the NGX has out there, etc., and develop products around that. So I think that about having, ETFs around themes, around markets, are all things that can be potentially achieved in our market. Maybe not everything. Maybe we can't have a pure play offshore tracking ETF, given the constraints that we may have from a regulatory perspective. But I still think that within the things that regulator allows, there is a lot of room to do, to expand within the things that are currently available. As I said, why do we have just one bond ETF? Why do we just have a few, ETFs tracking the NGX 30? It really means that there is room, right, to expand within what is currently available. And I think that as operators, is something that I'm sure we're all talking actively about the ways that we can expand within what is available today, as we work with the regulator to maybe, allow us to do some of the more exciting things that I wrote down, when Adele was speaking around, for example, offshore tracking. See Rabi smiling, because that's something that I'm sure, she gets many questions about all the time, because it's something that we're all looking for.
Absolutely, especially when you can invest in with your local currency in
local currency. Yes,
if we can figure that out in Nigeria, I imagine that would be a very popular ETF.
Absolutely, absolutely.
All right. So fortunately, as you can imagine, we have overrun the time allotted for this, but I will appeal to all our panelists. If you can just take a look at the Q&A field and perhaps type in your responses to some of the questions as we begin to round things up. So I want to say a big thank you again to all our panelists and of course to our moderator, who has done an excellent job just taking us deeper into this whole concept of ETFs. On that note, as we begin to round things up, I'd like to now call on Mr. Jude Chiemeka, who is divisional head. Oh, okay, actually, just before that, we do have a reveal of the outcome of the polls. And I would say, sadly, I'm unable to confirm all the correct answers, but here you are in terms of how people have answered the questions. I can confirm that we have 12 ETFs listed on the NSE. So I think a majority of people got that right. And you can begin to scroll through to get some perspective on the other responses. So thank you again for participating in that poll. On that note, I'd like to welcome, as I was doing just now, Jude Chiemeka, who is the divisional head, capital markets at the NGX, to give some closing remarks as we begin to wind things down today.
Thank you very much, Wally, and good morning, distinguished ladies and gentlemen, and to our panelists. Thank you for indeed doing a great job on the subject. Let me start by thanking all the participants for really participating in this laudable event. We are delighted at the quality of deliberations and contributions from various subject experts during the course of this workshop. Certainly, today's presentations and panel discussions have provided broad insights in the understanding of the benefits of investing in ETFs, as well as proffered solutions aimed at resolving the challenges experienced by the ETF issuers in the Nigerian capital market. The webinar also highlighted how to utilize ETFs as a portfolio and risk management tool and the process of investing in ETFs. This change is very positive that all stakeholders and participants have benefited immensely and that they will continue to serve as a timely catalyst to improve the participation of retail and institutional investors in the ETF market. It is exchanges belief that there will be more traction geared at deepening the ETFs market against the backdrop of this conference. I would like to reiterate that exchange will continue to strive towards ensuring that investing public derive value from investing in securities listed on the exchange. We remain committed to leveraging our relationships and partnerships to organize various workshops, webinars, conferences to improve market-wide knowledge and encourage more financial literacy campaign. Lastly, on behalf of the Board of Directors, management and staff of the Nigerian Exchange Limited, Our profound gratitude goes to our apex regulator, the Securities and Exchange Commission. We would also like to thank our esteemed partners, Vetiver Fund Managers Limited, Stanbic IBTC Asset Management, FVM Quest Asset Management, and our subject matter expert from JSC, Adele Hatton, Lotus Capital, CSCS, and FMAN, Mr. Aibo J. Imokede, Mr. Nona Awo, and who we are also very, very, very appreciative of the fact that the shareholders' perspective was highlighted, because we think that a lot of the engagement is really around how to deepen financial literacy and ensure that the retail investors have a good understanding of how they can utilize this to diversify their portfolio and return a decent level of return regarding their investment objective for investing in the market. But I will not forget to mention Wale Famuriwa, who really anchored this program and giving it that special touch as always. We're really truly grateful for all that has happened in this session. I would like to thank all the participants. At the heart of it, we had well over 430 for attending this event, and hope that the knowledge gained will be put into practical use. Finally, I would like to thank all my colleagues who have really worked tirelessly to put this event together. Kazim and the rest of the secondary markets team, Chidima, Clifford, and the rest of the corporate communication team. Thank you guys for doing an excellent job as always. Once again, let me thank all that have participated in this event, and do enjoy the rest of your day. Thank you so much.
Thank you very much, Jude. And once again, I just echo the thanks and appreciation of the NGX and all our partners, for everyone that has participated in this event. I want to believe that we've learned quite a bit. And just as Mr. Dayobiso challenged us at the beginning, we should all come together to see how we can move this products class forward in the Nigerian capital market. So on that note, I'd like to say thank you so much to everyone for joining us. Once again, I appeal to our panelists, if you can, and I can see you're doing that already, please type in your responses to the questions, and we look forward to having you at the next event.